And for more on all of these developments, we are now being joined on the broadcast by Mike Buckley, senior journalist and political commentator, director at Independent Commission on UK-EU Relations, live from London. Thanks very much for being here. I have to begin by asking you for your take on the impact of Trump's tariffs so far.
Well, the impact has been huge, as you would have seen on the markets across the world. I mean, they fell last week at the end of the week, and then they've fallen this morning in Asia and Europe already. And the falls are staggering. I mean, they're as big as we saw when the pandemic started a few years ago, but they've already continued for longer. I think the pandemic falls recovered fairly quickly, within a day or two. I mean, not to where they were before, but the markets this time around continuing to fall, and that's because we've seen no change in US policy. And indeed, Donald Trump and his advisors have been saying that the US is going to stick to this policy, and that they're in fact, very relaxed about the fact there have been such big stock market falls across the world. And as we just heard with the comments from Donald Trump, he believes he has a genuine grievance, and he believes that the US has been actually mistreated, which of course, if you talk to an economist, is just simply not the case. Globalization means that some countries will have a trade deficit, others will have a trade surplus, but countries are strong in different areas. So it isn't the case that he's been mistreated by China or by the EU or by his other trade partners. He's fundamentally misunderstanding how economics works and misunderstanding how trade works. And of course, the impact for all of us is going to be, significantly cheaper stocks and stock falls and significantly less confidence. We're looking at a US recession, and we're potentially looking at a global recession as well. And the implications are going to be huge. So, of course, we can now see countries across the world, including in the UK and the EU, working out how they're going to respond to these tariffs.
Right. Speaking of which, how do you see this playing out for the European Union overall?
Well, so the European Union is discussing today, so trade ministers are meeting today to discuss how they're going to respond. And markets and other governments are expecting that the EU is going to have quite a robust, a full and kind of, courageous response to these tariffs by responding maybe with tariffs of their own or targeting big tech, so companies like Apple and Google, and really trying to hit the US economy where it hurts. But there is a split of opinion. So France and Germany, for example, in the EU, they want to take quite strong action against the US and show that they're a big economic player. Others like Spain and Italy want a slower and more relaxed response, and they want to try and negotiate with the US rather than push for a strong response. But I think we will see a unified response from the EU today, but I don't quite know where it's going to land. I would imagine, given it's the EU, it'll be some kind of compromise.
And what impact do you see on the Eurozone economy?
Well, the Eurozone economy, like any other economy, is going to be hit substantially like this because, as we know, global trade has become ever more interconnected over the past, 4 or 5 decades. So any economy that is closely linked in trade terms with the US is going to be impacted by this. But then again, any country in the world any country in the world is going to be impacted. Not even if they don't have direct tariffs put on them by the US, though of course every country does, or even if they don't trade much with the US, the fact that trade is so disrupted and the fact that companies and supply chains are so disrupted, pretty much every country is going to be affected. So we could be looking at quite an extreme example. We're already seeing an extreme example on European markets today, but the impact on the Eurozone economy, if these tariffs are maintained in coming weeks and months, could be huge and could indeed put the whole Eurozone into recession.
All right, we're leaving it there for the moment. Thanks very much for joining us with those perspectives. And global markets were hit by a wave of panic on Monday, with investors reacting sharply to the escalating US tariffs and the threat of a worldwide trade war. India's benchmark indices saw their steepest single-day drop in 10 months. The Nifty 50 slipped 3.24%. The Sensex fell 2.95%, wiping out over $140 billion in market value. A staggering 775 Indian stocks touched 52-week lows, including blue chips like Infosys. However, compared to the rest of Asia, Indian stocks showed relative resilience. Japan's Nikkei 225 plunged 7.8%. Hong Kong's Hang Seng slid over 10%, and China's markets continued their downward spiral. The MSCI Asia ex-Japan index, in fact, tumbled 8.3%, signaling broader risk-off sentiment. The global sell-off pressure intensified after U.S. Federal Reserve Chair warned that the newly announced tariffs under President Trump were larger than anticipated and could derail inflation and growth targets. But as we track all the market commentary for you, experts are largely of the opinion that Tech and metal stocks were hit the hardest in India due to global recession fears. Yet, many noted that India may weather the storm better than the others, thanks to relatively strong domestic fundamentals. Despite Monday's meltdown, Indian equities remain among the most stable in a region rattled by geopolitical and trade uncertainty. To stay up to speed with the latest news, download the WION app and subscribe to our YouTube channel.